We start today's market talk. During bull market, just be a bull, not monkey. Trying to jump from one stock tree to another stock tree will increase only your brokerage, not profit. And just for information, JP Morgan chief strategist Marco Kolavinevic lost his job recently after being bearish on the US market since early 2023. So it is not only India, everywhere else there is a big rally in equity markets, and most of the people are regretting not investing earlier, and those who did invest earlier wish they had invested more. But you must remember, returns always come in phases, and you need to be having a long term perspective so as to get returns and rewards. The biggest winners of today are from ignored sectors a few years ago. You can see PSUs, power, etc., just moving up. Buy your selected stocks when they are significantly undervalued with long term horizon, not after they have run up 100%. Market outlook: S&P 500 headed towards a fresh record and treasury yields dropped across the curve. Just switch off your volumes. Across the curve, as data showed, US hiring moderated in June, while the jobless rate rose to the highest since late 2021. Uh, S&P 500 had best weekly performance driven by labor market data that has supported the case for Fed interest rate cuts, and dovish commentary from Fed Chair Jerome Powell and Tesla also performing. With the union budget coming up, a decent monsoon, stronger exports, and rate cuts down the road, momentum may well be sustained. Budget, there would be a consumption push or investment led growth. I think they will strike a balance due to RBI's generous dividend. Also, keep fiscal deficits in check. Switch off your volumes. Just switch off your volumes. Foreign portfolio investors now seem to have joined the party. FIs are net buyers in June of around 22,000 crore, and in July of around till now around 6,876 crores in cash. FI net index long stood at 83.62% right now, with long positions of 3.84 lakh and planned shorts are 2.8 lakhs. So actually FIs are long and clients are short. So let's see where it goes. All banks, including HDFC Bank, have shown a lackluster performance on the deposit front. HDFC Bank gross advances shrank by 0.8%. No growth in deposits. Low cost CASA deposit fell by 5% because everybody is taking term deposits because they offer better yield. Uh, Deposit growth is not keeping pace with loan growth, keeping the credit to deposit ratio elevated. Choice is between lower growth or squeeze on margins. A concerning trend is the increasing number of companies experiencing promoter selling across the market. Uh, Promoter sales, it is prudent to monitor stocks where promoters have sold for non-strategic reasons. Promoters have sold shares worth 87,000 crore in the first 6 months of 2024. Out of these, 39,000 crore is from PE investors. Earning guidance from Indian IT outsourcing firms, including TCS and Tech, will reveal how the much-awaited recovery is shaping up. I'll show you the IT index. Uh, TCS may show some profit growth and addition of employees. HCL Tech may show 3 to 5% revenue growth as per guidance, but discretionary IT spending may remain muted. Now, US, as I've discussed, US swaps are currently projecting two Fed rate cuts in 2024 with a September start. Unemployment rate rose to 4.1% and average hourly earnings cooled down. Brent crude rose due to significant drop in US inventories. So as you see here, uh, the US yields dropped from around 4.5 level to around 4.2 level last week. The dollar index also dropped, and it's come and taken support now. It's 20 EMA. It's now at 104.8. So it has also dropped. The Brent crude rose because there was a drop in US inventories. So that is the reason why the Brent crude is rising. Gold has again rose because there is a talk about rate cuts in US. So gold has again gone to 2391. Copper again now, as there is a drop in rates and expected lowering of bond yields, and the dollar has corrected, so all the metals and commodities will go up, and predictably copper has bounced back from 20 EMA. Nasdaq rose fresh high along with S&P 500 and the complete thing, so it made a high of 2391. So that is where it closed, 20,391. India VIX, if you see, this is a daily chart. It dropped last week, and on Friday it went nearly touched 12 level and then bounced back from there. But it's on a downward trajectory, so it will correct much more from here, and or generally remain at these levels. Government bond yields also dropped. It has come to around 6.99 now, so it went down again as the US bond yields also went down. On a weekly chart, if you see Nifty, it's in an upward channel and it seems to be breaking out. So the momentum is there. Two strong green candles last 2 weeks has taken the Nifty up. This is a daily chart of Nifty. So if you see here, Nifty was green only on 2 days, and 3 days it was red. It made a high of around 24,400 and then corrected from there. Just switch off your volumes, please. The better support would be somewhere around this low from where this swing started. So that is somewhere around 23,350, and the 20 EMA at around 23,744 would provide the support. Nifty Bank again is in a rising channel, making higher highs and higher lows, and it has broken out. Though it corrected on the weekly chart, and it made a long shadow, which indicates there was a long unwinding at the higher level. So it seems to be going down. We'll have to see this 52,000 level, the base of this the base of last week, the low of the last week. And in case it takes support on this trend line, if it takes supports around this trend line around 51,000 levels. Otherwise, if HDFC Bank is correcting, the rest of the banks are still in momentum. This is a daily chart. So if you see, on Thursday, it made a fresh high and then it corrected. And then on Friday, it corrected more because HDFC Bank was corrected. The momentum of RSI is also going down. HDFC Bank, if you see here, as I had indicated last week, it went to from the if you draw the Fibonacci extension, it went to that target of 1784, that 23.68% extension, and then came down from there in 3 days of rally, and has come down now. First target should be this zone where it had broken down from, that is 16, 20, 25, and it has already broken the 20 EMA, and the next should be the 50 EMA, which is at around 1590. Most likely it should come somewhere around 1590 to 1600 levels, and if that level breaks, then I think that 200 EMA will come into play. But it is looking weak, and RSI has also dipped, and this momentum is down. Reliance has broken out, and then it broke out on Friday in the end. It made a high of nearly 3,200 based on the Geo IPO news. I'll discuss about this Geo IPO also. I don't think a IPO is likely to come because of the valuation and the quantity. Uh, it may be similar to what they did with Geo Financials. ONGC seems to be in momentum and breaking out. This is a weekly chart. So it has taken support at 20 MA and it's breaking out from here. So this energy sector seems to be in momentum. The other sector which is looking good is Nifty IT. This is a weekly chart and it is breaking out, and it may test this high it had made of around 38,200 level and then test the 39,000 level. If you see here, though it made a lower low, but it is also making higher highs. So if the results are slightly positive, it will go up. But in case the results are negative, then it will come back and test the last lows it has made. Midcap index, if you see, continues to go up, and it has made a fresh high. Similarly, the small cap index, it's moving up with momentum and it has made a fresh high. And if you see here, it has nearly doubled from last year March. So I'll cover a few stocks today. First is Ambuja Cement. Ambuja Cement is an interesting case because it's well poised for growth. Installed capacity is 93 MTPA, million tons per annum. 14 MTPA has been added in the last 18 months. It is on track to achieve 140 MTPA by 2028 end, with 20 MTPA under execution and 41 MTPA at various stages of execution. It reported an EBITDA per ton of 1,081 in FY24, while FY23 was 753, owing mostly to lower power and fuel costs and operating leverage benefits. EBITDA per ton to increase to 1,433 by FY26, mainly due to ongoing efforts to improve cost efficiency. The management aims to save rupees 500 per ton in total cost by FY28 compared to FY24, with an EBITDA per ton target of 1,500 plus. The cost saving initiatives could be principally led by increasing the proportion of lower cost green power, target 28% of total by FY25 and 60% by FY28. So they are going to do a lot of cost saving measures, which is giving impetus to their EBITDA per ton, raising the share of captive coal, further optimizing logistics and raw material costs driven by group's energies, and boosting the share of premium products. Major strengths are consistently operating at greater than 80% capacity utilization, robust brand equity with pan-India presence, cost-effective operations, and a strong balance sheet, synergies from recent acquisitions, and ambitious expansion plan and focus on cost saving. Direct sales and establishment of bulk terminals in critical location will minimize lead distance besides improving market costs, resulting in higher margins. Anticipate solid revenue growth during FY25 to FY28 despite a high base. Uh, Please switch off your volumes. Latest acquisition to strengthen its presence in highly fragmented, fast-growing southern markets such as AP Telangana. Cost saving to reach EBITDA per ton of, I told you, around 1,500 per rupees by FY28. Investing around 10,000 crore in green power projects, captive consumption of coal and limestone, uh,
because markets across the world have been moving up.
acquisition. They acquired Sanghi in August 23 due to proximity to raw material and bulk terminal with A-grade marine limestones with reserves of 1 billion per ton, 100% stake in Penna Cement.
41.5%. But Reliance profit now. I mean, I'm talking of this year. Very well in store. That is your second profit. ठीक है, things are not done. Things are moving well. Sorry? हाँ ठीक है, थोड़ा मैं जिस दिन मेरा ये छुट्टी उट्टी का हो जाता है, मेरे ऐसे ढीला पड़ जाता हूँ मैं। अगर जो जैसा काम होता रहता है तो हाँ, टुडे सुबह जा नहीं पाए, बारिश हो गई।
Now, coming back to Ambuja Cement, if you see here, calendar for so many years, if you see in FY24, the net sales dropped, but as the margins improved, the profits went up. Profit went up nearly 50%, and EPS was also up. Uh, they are expected to improve their operating profit margins to around 25% over the next 2 years, and EPS is going to go to 41.9. Sales growth, which is expected, is strong, around 25 to 30% growth in the next 2 years, and net debt to equity is zero. So they have a cash positive company. Operating margins are improving. ROE, ROC are improving. Uh, P is coming down, and EV EBITDA is also coming down. You can easily price it at around uh, 12 times EV EBITDA. Uh, they are doing acquisitions, so they are acquiring companies at lower valuation. Like if there's, you see their present valuations, they are at around uh, dollar 220 EV per ton, 220, and they are acquiring at 70, 80 odd. Both Penna and the earlier Sangi they have acquired is at much lower valuation as compared to their present valuation. So it is positive for them. And there is a point is about amalgamation of Adani cementation also to them. Adani cementation is directly owned by Adani Enterprise, so it will be transferred to them, to Ambuja Cement, and it will become a wholly owned subsidiary of Ambuja post merger. Uh, and Ambuja will issue shares to Adani Enterprise, proposed based on this transaction. So there is no cost to them. Uh, So it will be 100% owned subsidiary of Ambuja Cement. They have 50% ownership of ACC also. That is Ambuja Cement. So that is the present structure. Now this is the roadmap to 140 MTPA capacity by FY28. Existing capacity is 79. Projects under execution are 20, and additional projects at various stages are 41. So the total capacity is going to be around 140. So they are doing lot of clinker and cement projects in Bhatinda, Bhatapara, Maratha Line, Sankrail, Marwar, Farakka, Sindri, Salai Banwa, and Mundra. So different stages, and they are likely to be completed in FY26. So the capacity will improve, and as they are more efficient, so their profitability will improve. Now, if you see their chart, uh, it is generally at similar levels. It's not really moved up, and one can consider buying this on every dip and all that. I think it should do considerably well once they are fully working and they grab the market share. The other one is Shilchar Technology. Is a niche company. It supplies transformers, converter transformers, a type of power transformer and distribution transformers for renewable energy sector, that is solar and wind. It has capability to manufacture transformers of up to 132 kilowatt, though most of the production is of 66 kilowatt and below. 50% of its revenue comes from exports. The company is ramping up capacity by 3,500 MVA. MVA is megavolt ampere, from 4,000 MVA now, to meet more demand from domestic, international renewable energy markets. So one thing is, now they are only supplying for in renewable energy sector the transformers. and they are nearly doubling their capacity, which will be by around August, September, it will be positioned. The present plant of 4,000 MVA is running at full capacity with 7,500 MVA plant. It could see 80 to 90% capacity utilization. Government is planning to raise renewable energy capacity to 500 gigawatt by 2030, including additional solar and wind generation capacity of 260 gigawatt. The company's target markets. Also, the company sees higher capex in data centers being a growth driver. In export market, replacement demand is high. With power infra created in 50s and 60s being retired, the US and Middle East are its major export markets. The current order book is 500 crore, exports and domestic split equally. Company expects 800 to 900 crore revenue by FY26. EBITDA margin is likely at similar range. So if you see, if they do even 800 crore revenue in FY26 at 30% operating margin, operating profit would be around 240 crore. With some other income, say around 250 crore would be operating profit, tax at 25%, so net profit should be around 180 crore. So the EPS will be somewhere around 240, and I'll show you the present value. Their ROE is around 56%. So if you see here, this is their P&L. So if you see here, it has nearly doubled in the last 2 years, the sales. Operating margins has improved, has become three times. And because of that, the profit has become nearly six times. And EPS was 120. So in 2 years, if they continue like this, they increase their revenue by 50% uh, or more, then the EPS will double. So this is how their gross margins have improved. So if you see 800 basis point of gross margins, EBITDA margins have improved 900 basis points, and operating profit margins have improved uh, 777 basis points. So there's a big improvement in the margins which is coming into P&L. Now let's see their balance sheet. It's a very strong balance sheet. I think they must have done some bonus issue or something. So it has doubled equity capital. Borrowing are zero. So they are net. There is no debt, which is very positive. And if you see here, this is a chart. This is presently at 6,246. It moves with lot of circuits ups and circuits down. So best is that to buy closer to the moving averages or 20 or 50 moving average, but it's a stock for long term, and it should do well. Uh, Now I'll discuss the data center ecosystem. This sector is expected to grow at 40% CAGR over the next 5 years. The growth is supported by various factors, including both small and large businesses adopting digital technologies, which increases the demand for data storage, processing, and management. Along with this, internet usage is increasing, especially in developing regions, which requires robust data infrastructure for online activities. These users receive and transmit large amounts of data, thus increasing the need for fast communication lines and data transmission technologies. Other factors include the rise of big data analytics, and artificial intelligence and data sovereignty. Data sovereignty is a big issue because everybody wants that data be stored in borders of a country where it is generated for ensuring privacy. So that is a big factor which is driving this sector. Uh, there are four kinds of data centers. Edge, smaller size, last mile, low latency. They are just established next to the place where the data is being generated. Co-location, large data centers which rent out rack space to third parties. So they just manage the data center, and you can install your server there and store your data. Then hyperscalers, large-scale cloud service providers, which is what it is growing now. Uh, and AI data centers, facility with vast computing resources designed for AI workloads. Data centers need constant power supply, effective cooling, and uninterrupted network service to function efficiently and provide 99.99% plus of uptime. So it's a niche business which requires good skill to manage. Demand is growing for both co-location and hyperscale data centers. However, expect a higher demand for higher scalar, hyperscalar data centers due to following reasons. Demand for cloud computing. The rapid adoption of cloud computing in India is driving the need for hyperscaler data centers as they provide the massive infrastructure required to support cloud services. Digital transformation initiatives. The government focus on digital transformation initiatives like Digital India are fueling the demand for data centers, with hyperscalers playing a crucial role in this process. Evolution of AI has also fast-tracked the demand for IT infra because of increased adoption of cloud services and digital transformation. Hence, they are very important. There are a lot of vertically integrated data centers which you would have heard about. One is Microsoft Azure, then Amazon Web Service, AWS, Google Cloud Platform. They are those big time data centers where most of the people are storing their data. So that is the reason why these data centers are important. Now let's come to the value chain of data center ecosystem. First is design, architectural, engineering, and network design. So there would be companies who would be doing this. Then OEMs, they manufacture and supply critical equipment and components, including servers, storage devices, network equipment, cooling systems, and power distribution units to them. Then EPC firms are responsible for construction and implementation of data center facility based on design specifications. Then operation and maintenance guys provide or they manage day-to-day operations, maintenance, and optimization of data center facilities to ensure continuous availability, efficiency, and security. Co-location providers offer shared data center facilities where multiple tenants can house their servers and IT infrastructure. Developers are involved in building and managing these facilities. So there are number of people who will be operating in this field. I'll cover which are the companies, listed companies in this. There are a lot of unlisted companies also. Now let's see the data center cumulative capacity growth. So if you see here, this is in megawatt. So presently, if it is one gigawatt or 1169 megawatt, it will become approximately 4 gigawatt in next 3 to 4 years. So this is the likely growth of CAGR of 41%. Uh, Investment will also come in the same scale around 42% over the next. This is in billions of rupees. So that means if it is presently it is around 58,000 crores, it will become 2 lakh crore in FY28. So that is the kind of growth which is expected. Now I'll cover few stocks. First is design guys. Now, among the design guys, the one of the listed company is this Orion Pro Solutions. If you see here with this last interest in data centers, it has already spiked. It has moved from 1380 to 1600 in the last 3 days only. They have 8,888 crore market cap and a PE of 63. So just keep these stocks under your horizon, and whenever there is a big dip, you can get into them. Other one is Techno Electric. Now this Techno Electric is establishing a 400 megawatt data center in Chennai. It has a market cap of around 16,000 crore and a PE of around 58.6. So it has come down, corrected. It had gone up, it has corrected and all. But it has got other businesses also. But this is one of the thing they are doing. Then network technology. Uh, they are uh, they provide high-end computing solutions, AI systems, servers, etc. They have a market cap of around 15,000 crore and a PE of around 196. So it had recently got listed at around 800 odd, and now suddenly it has moved up. Now, if you talk about OEMs, like I talked about design guys, so that was Orient Pro. Then OEMs are would be something like ABB, Schneider Electric, Cummins, because they have to provide generators. Then EPC guys who will establish or build this would be Sterling and Wilson Data Center EPC, Tata Projects, L&T, because cooling is required, Blue Star would be involved. Operation and maintenance, again, Sterling and Wilson Data Center EPC, then CBRE and JLL. JLL, both of them are basically infrastructure or a real estate companies which do the operation and maintenance or the housekeeping and other issues of that. of that. Then co-location providers, basically they are non-listed, Extra, Entity, Equinix, etc. Then there are others like E2E networks. They provide the network solutions for this. Again, it has moved up. It was generally at static level. Nobody was interested in this at around 200, and suddenly it has moved to 1800 plus 2000 odd. So there is a lot of now interest in this field. Uh, so this is one, and other one is black box. They also handle this. Now, if you see here, black box provides system integration, technical product solutions. It has a market cap of around 6,600 crore and a PE of around 38.5. It was also, lying low, and then suddenly it has shot up in the last few days, 15 odd days, and has moved from around 260 odd to 400 odd levels. So just keep these in mind. Uh, Most of these guys are would be doing one of the jobs or in establishment or running of the data centers, but as they will grow, there will be more companies which are not in non-listed space also, which will get listed or will also come into horizon and take market share as per performance. So I have finished. We'll take questions now.